Right now, Centrelink can see your payslip before you even tell them about it. That is not a scare tactic. That is exactly how the system works in 2026. Something called Single Touch Payroll means the moment your employer processes your pay, that information lands in Centrelink's system almost instantly. If what you report does not match what your employer sent through, you get flagged. And once you are flagged, you're looking at a review, a debt letter, or in some cases, your payment gets paused while they sort it out. So if you are a pensioner who has been quietly doing a few shifts on the side or thinking about it, I understand why your stomach just dropped a little. But stay with me, because here's the part almost nobody explains properly. This new level of tracking is not designed to punish you for working. It is designed to catch mistakes. And once you understand the actual rules, you will realize the system is far more generous to working pensioners than most people believe. In the next few minutes, I'm going to walk you through exactly how much you can earn, exactly why the fear around this is outdated, and exactly how to stay completely safe while you do it. If this channel is new to you, I am the one behind RetireScope AU. And every week I break down exactly this kind of thing, the stuff that affects your actual bank account, but never gets explained in plain English. If any of this helps you today, hit subscribe now, because Centrelink changes these numbers multiple times a year, and I will keep you ahead of every single one. Let's start with the fear itself, because it is more common than you think. I want you to picture a woman named Margaret. 69 years old, lives in Adelaide, been on the pension for 2 years. Her daughter asked her to babysit the grandkids twice a week and offered to pay her for it. Margaret said no, not because she did not want to help, but because she genuinely believed that any extra dollar coming in would slice straight into her pension. She turned down paid time with her own grandchildren because of a rule she had never actually read. That story plays out in thousands of homes across Australia. A neighbor offers cash for mowing the lawn. A local cafe wants someone reliable for 2 shifts a week. A hardware store needs weekend staff. And pensioner after pensioner says no, purely out of fear, without ever checking the actual numbers. So let's check them together right now. There are 2 separate things working in your favor here, and almost nobody realizes they stack on top of each other. The first one is called the income-free area. This is the amount of income Centrelink lets you earn before your pension is touched at all. As it stands right now, a single pensioner can bring in $226 a fortnight from other income sources, and their pension stays completely untouched. For a couple combined, that number sits at $396 a fortnight. Go over that, and your pension only drops by 50 cents for every extra dollar, not a dollar for dollar hit. So even stepping over the line is not the disaster people imagine. Now here is where it gets genuinely good, and this is the part Margaret never knew about. On top of that free area, there is something called the work bonus. This only applies to money earned from actual work, whether that is a part-time job, casual shifts, or certain types of self-employment. Right now, the work bonus lets you earn $300 a fortnight from work, and Centrelink does not count a single cent of it. Not partially excluded, completely invisible to the income test. Stack that on top of the free area, and here is the real number. A single pensioner can earn up to $526 a fortnight from paid work before their pension is affected in any way at all. $300 from the work bonus, plus $226 from the standard free area. For a couple, where both partners are eligible pensioners, the combined figure climbs even higher again. Think about what that actually means in real life. 2 shifts a week at a cafe, a regular babysitting arrangement with your grandkids, helping out at a local nursery on weekends. For a huge number of pensioners, the kind of income sits comfortably under this threshold and never touches their payment. So Margaret could have said yes. She could have been paid to spend time with her grandchildren, and her pension would not have moved an inch. Now, a question I get asked a lot is what actually counts under the work bonus, because a lot of pensioners assume it only applies to a proper 9-to-5 job. That is simply not true. Casual retail work counts, the kind of 2 or 3 shift-a-week job at a place like Bunnings or Woolworths that so many retirees quietly enjoy. Trade work counts too, so if you are a retired electrician or carpenter picking up the occasional small job for a neighbor, that is covered. Tutoring a grandchild's classmate in maths, walking dogs for people in your street, doing the books for a local small business a few hours a week, driving for a rideshare app on weekends, even selling produce from your own garden at a local market. All of it falls under the work bonus, as long as it is genuine work you're being paid for, rather than passive income like rent or dividends. That distinction matters, because passive income does not get the work bonus treatment. Only money you earn through actual personal effort does. So the retiree doing 3 shifts a week at a garden center is in a completely different position, under far more generous rules, than someone earning the same amount from a rental property. Now let's talk about something even fewer people know exists. It is called the Work Bonus Bank, and it works almost like a rainy day account for your income test. Here is how it works. If you do not use your full work bonus in a given fortnight, the unused portion does not just disappear. It rolls over and builds up in a balance. up to a cap of $11,800. If you are new to the pension and have not built up a balance yet, you actually start with $4,000 already sitting in that account. Why does that matter? Because retirement income rarely comes in perfectly even amounts. Maybe you barely work through winter, then pick up extra shifts over the Christmas retail rush, or you do occasional garden maintenance jobs that come in bursts rather than a steady weekly wage. That banked amount from your quiet months can absorb the busier ones, keeping your pension protected even when your income spikes for a few weeks. This is exactly the kind of detail that never makes headlines, because it is not flashy. But it is the difference between someone confidently picking up extra hours in December and someone turning down that same work because they are terrified of what it will do to their payment. Now, let me show you how this looks for a couple, because the numbers stack up in a way that surprises most people. Take David and Linda, both 68, both on the pension, living just outside Newcastle. David does 2 mornings a week at a local hardware store. Linda helps out at her sister's cafe on weekends. Individually, each of them can access their own $300 work bonus since it applies per eligible pensioner, not per household. That is $600 a fortnight between them, completely ignored by the income test. On top of that, their combined income free area as a couple sits at $396 a fortnight. Add that to the $600 in combined work bonus, and David and Linda can bring in close to $1,000 a fortnight between them from work and other income before their pension is touched at all. For a lot of couples, that covers exactly the kind of part-time work they were already doing or quietly wanted to do without realizing how much room the system actually gives them. Now, let's circle back to that fear I opened with, because this is where the smart part comes in. Single Touch Payroll genuinely has changed how quickly Centrelink sees your income. That part is true, and it is not going away. But the fear around it usually comes from one place. People worrying they will accidentally report the wrong number and get hit with a debt. The actual solution is almost embarrassingly simple. When you log into your MyGov account to report your income, Centrelink now pre-fills your employer's payroll information for you in most cases. Your job is simply to check it against your payslip and confirm it is correct, rather than manually calculating anything yourself. If a detail looks off, you correct it before submitting, not after. That single habit, checking before you confirm, is what keeps almost every pensioner completely clear of any review or debt letter. In other words, the system got stricter on speed, but it also got easier to get right because so much of the reporting is now done for you rather than by you. Even so, there are a few honest mistakes that trip pensioners up again and again, so let's clear those up right now. The first is reporting on the wrong date. If your reporting is due on a Tuesday and you report a few days early because it is convenient, you can end up leaving out a shift that gets paid after your report goes in, which throws the numbers out. Always report on the date Centrelink actually asks for, not whenever suits you that week. The second mistake is forgetting to report gross income rather than what actually lands in your bank account. Centrelink wants the amount before tax, not the after-tax figure on your bank statement, and mixing those two up is one of the most common reasons a report comes back wrong. The third is couples reporting income at the exact same time. If you and your partner both log in and submit together, the system can struggle to show each of you the other's most recent update, which sometimes causes duplicate or missing figures. Stagger it by even an hour, and this problem disappears completely. None of these are complicated once you know them. They are simply small habits, and once you have got them, the fear around real-time reporting stops being a fear at all. So here is the real picture once you put all 3 pieces together. The income-free area gives you breathing room on any outside income. The work bonus adds a further $300 a fortnight specifically for work, completely ignored by the income test. And the work bonus bank protects you when your work income is irregular rather than a steady weekly amount. Combined, the system is built to reward pensioners who want to stay active and earn a little extra, not punish them for it. If you are the kind of person who has been quietly saying no to paid work out of fear, I want you to do one simple thing after this video. Log into MyGov, check your current income being reported, and see exactly how much room you actually have under these numbers. For most single pensioners doing a modest amount of work, you will find you have far more space than you assumed. And if you know someone like Margaret, a parent, an aunt, a neighbor, who has turned down paid work because they were scared it would cost them their pension, send them this video today. This is the kind of information that genuinely changes what someone feels they are allowed to do with their own time. Before you go, drop a comment and let me know which part of this surprised you the most, the work bonus stacking on top of the free area, or the work bonus bank rolling over your unused amount. I read every comment, and it genuinely shapes what we cover next on this channel. And one honest note before we wrap up, these figures are current as of now, but Centrelink reviews these thresholds multiple times a year. So always confirm your exact numbers against your own MyGov account rather than relying on memory, including mine. If this video gave you a bit more confidence about picking up work without risking your pension, hit subscribe and turn on notifications, because RetireScope AU covers exactly this kind of update, the ones that barely make the news but genuinely affect your bank account. Take care of yourselves and do not let outdated fear stop you from earning what the rules actually allow.